We all know the intricacies right now of what's going on with the board needing to restructure management, appoint a new CEO, salvage its reputation, salvage its operations in the United States. What are the options, do you think, for BP?
Well, I think, as you've heard reported all day, Tony Hayward, the Chief Executive, will move on more than likely at the second quarter result presentation tomorrow. I see there's a very late report coming in that he possibly might have a secondary role in some capacity at TNK BP. Now, it's the expectation that Robert Dudley, who heads up the Americas and Asia group for BP, will come in possibly as CEO. He might be introduced later on the track after the chairman, Carl Henry Swanberg, sits out a period after which one expects possibly he might even leave as well. So we'll have an attempt by the company to rearrange the furniture. Tony Hayward, I'm afraid, has been nominated as the sacrificial lamb, grossly unfairly in many respects. And there will be a need to reconstruct their business in the United States, perhaps, seems their aim and ambition, or to exit out of that market and go elsewhere. They have asset sales on the way, and obviously a new strategy coming into play.
Well, you know, ultimately the buck has to stop with somebody, some people would argue. Now, as you said, they've got their quarterly earnings, which will be released this week, and it's expected that although net income will possibly have risen by $5 billion, the market value of BP is expected to have dropped by $50 billion. Now, that's a whole series of issues that come into play, not least the cost of the oil damage, but perceptions of whether or not this company can recover financially going forward into an era where oil investments are dwindling in general. Where does that put BP?
Well, I think they've had a tremendous whack on the market in terms of capitalization, as you put it. And there are liabilities anywhere up to $30–40 billion in compensation, in direct and indirect liabilities that will work its way through the courts over the next decade, much to the delight of the lawyers, I'm sure. And there will be a weakened cash flow in the interim, and there has been a dividend payment put on hold or put out to the future, and this has implied now more asset sales. They will pick off the weaker assets, have they done already in some respects, try and trim the strategy of the portfolio to the core and the stronger assets, and reduce their vulnerabilities that way. They will attempt to keep liquidity. This is a very strong company. It has 18 billion barrels of reserves. Probably at $20 billion of asset sales, you're looking at dropping a couple of billion. So it's nowhere in terms of that respect in the dog box, or if you like, out for the chop. And therefore I do discount the takeover strategies that are mentioned earlier.
All right, so what sort of company is likely to emerge from all of this? Because you mentioned earlier on that already there are asset sales, and we've seen them in the United States and Canada and in Egypt, and there's also revival of efforts to sell off their assets in Alaska, and then these rumors you're suggesting that the Chinese are in the running for buying off BP.
Well, I think a company that will be leaner and meaner, if you like, or leaner and keener, as they prefer to say. There have been $7 billion of sales, United States, Canada, and some assets in Egypt to Apache Energy. Some assets in Pakistan are on the block, might go to the government, might go to private players. Some gas fields and pipelines in Vietnam have been discussed as possibilities. There is also a possible $6 billion sale of corporate equity ownership in Pan-African Energy in Argentina, in the Southern Cone. And they could even go further in other respects. So I think what will happen is you have a stronger company of a smaller dimension coming up. You have to imagine it will have a newer, more aggressive strategy. They will need to pick up acreage and assets in other quarters as well. But don't forget they are sitting with some formidable assets in Azerbaijan, in Angola, in Egypt still, and in Algeria, as well as in Iraq, where they signed a big deal with Sinopec on the Rumelia field. So I don't think BP is going to be taken out by the Chinese just yet.
Okay, Kwibi, just your inputs here. Oil prices have increased by about 61% since 2009, and that's what's really put BP on a good footing in terms of their revenues coming into the second quarter of this year. But of course, with a $20 billion compensation package and cleanup package, there are a lot of liabilities, and already people are saying liabilities would be about $33 billion. What sort of turnaround strategy would be needed by the incoming CEO, going forward?
Well, literally, you know, in essence, what you've got is, and this is really a US issue at this stage, so this is not really a BP global issue, this is really a BP US issue, is looking at the reputation of the company and trying to rebuild the reputation in that market. And it really goes hand in hand with complying with what regulators require, and then playing, you know, the kind of the legal game, you know, so to speak, you know, in order to make sure that all the claims are settled and so forth. I think the important thing is there's two types of businesses that are listed. The one type of business is where there's machinery involved that spins cash, you know, this proverbial cash flow. And then the second type of business is kind of the business that has to pull a rabbit out the hat in order just to create any cash flow. BP is one of the first businesses. You know, you can slice and dice this business any way you want to slice and dice this business. This is a formidable business. It's got serious assets behind it. Its net revenue, on a net earnings line, this business turned $16 billion last year, of which it pays out an astronomical amount in dividends. They're merely just asking the market for some time not to pay a dividend so they can just do some cleanup costs. And for that, you are getting this business at a dirt cheap rate. And the market, unfortunately, is starting to see some of this, but not seeing all of this.